Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. This week is a big week for tech earnings, a week in which we could see some negative earnings news. We're going to talk more about that now with our research director, Shiraz Mian, stock strategist Todd Bunton, and Brian Bolin, who join us this week. The big question, I think, is if we do get negative earnings from the tech sector, negative earnings news, will the positive economic news that we've seen recently offset any negativism? Shiraz, you say potentially.
Potentially, yeah. I mean, that's what we have been seeing for a while in the market. You would recall that the third quarter was a very weak reporting season as well. But we did not see any jitters in the market even then. And the economic news flow lately has been quite favorable. So if the fourth quarter reports from the Apples and the Googles of the world are disappointing, but if they can point to something on the horizon which is looking shinier than what they reported for the last 3 months, then that should be enough for the market to get reassured about. The key element on the earnings front is always what management talk about for the coming quarters and for the full year 2013. And if the current trend of favorable economic data indicates that the coming quarters are better than what we have seen in the last few, then that could potentially be a catalyst for the market to discount weak Q4 earnings, but keep looking ahead to something better on the horizon.
All right, Todd, what do you say?
Yeah, I think that I originally thought earnings would be the big story.
Right.
And if we get weak earnings, we're going to have a weak stock market. Not the case is what we saw last week, at least on January 17th. Jobless claims came in way below expectations. And that drove the S&P to new multi-year highs. So I think economic data, as Shiraz was saying, can be a driver in the face of a weak earnings season and could keep the party going at least for a couple more weeks.
Yeah, we have seen recently also where, like you say, the market still goes a little bit higher in the face of any bad news that hits the wire.
Sure.
Brian, you watch the tech sector with regard to earnings. If there is any negative news out this week on tech earnings, where might they come from?
I think we saw a little bit of negative news come out of Intel last week. They made their number, but what they did is guide margins lower for the full year. And I think that's going to be the pattern that you're going to look for, is guidance for the year 2013 is going to come down a little bit. This is the most important earnings season, of the year. You have the fourth quarter. You not only have the wrap-up of last year, but you have the full year outlook from management. And that's what makes this quarter the most important quarter of all the quarters. So as we look towards the next week, we're going to look for guidance to come down.
What about Apple? Is that party over?
There's a lot of debate on Apple. Obviously the suppliers are getting into the mix now as well, and we're starting to see them feel the pressure as well. So I think that there's a lot more to this story yet to come from Apple.
I want to get back to Todd's point, and Shiraz, maybe you can clarify a little bit. The tech group makes up a large portion.
The largest, that's right.
Yeah, of what we watch out there. So I'm going to get back to my original question. Because it's so large of a sector, will negative earnings news be offset by recent economic data? I mean, how can it be?
Absolutely. You're absolutely right. Well, we have to define negative earnings news. One negative earnings news is that these companies in their actual reports come out and underperform expectations. Like Brian rightly mentioned, Intel made its numbers, but the margin it guided towards for the rest of the year was underwhelming. And that's the part of the earnings news, the outlook, the forward-looking part of the earnings news. If that is weak relative to what is priced in the market right now, we have earnings expectations for all of these companies: Apple, Google, Microsoft, IBM, the major ones on the tech side that are coming out this week.
Right.
If the top line, the bottom line, the margin expectations that are priced into these stocks right now, if management's outlook turns out to be weaker than what's in the market, then that's a big headwind. That's a
Okay.
problem. That's a problem for these stocks. And as you rightly pointed out, tech is the largest sector in the S&P 500, both
Right.
in terms of market cap and earnings contribution, and that's a problem for the market as well.
At any rate, it looks like the market has now looked beyond the debt ceiling argument, right? Any debt ceiling discussions? The market seems to be looking way past that. Todd.
Absolutely, yeah. It's definitely not priced in with stocks at all-time, well, multi-year highs, at least on the S&P. Doesn't seem to be a factor yet.
Yeah, the Friday announcement from the House about decoupling the debt ceiling issue from the budget sequester, I think that was a key positive for the market. But I didn't really see any nervousness in the market even before that announcement.
Yeah.
And the CBOE VIX index Friday went below its 2007 low.
Yeah.
So there's a lot of optimism, even from my comfort level, bordering on complacency in the market.
Yeah, and if we look back to December, when the original argument came about, the market didn't care too much until the end of the year,
That's right.
until the last few days, and then it was kind of like, oh, we're in trouble, and then right back up it went. So I would imagine that the same type of scenario will play out again when it gets closer to time to vote.
Anybody here feel that the bulls are a little too optimistic?
They are,
Yeah.
they're absolutely. When you have the CBOE volatility index at levels last seen in May 2007, and with all these issues on the horizon, then they are way too optimistic.
And for me, it's about earnings growth this year. That's going to
right.
be the story. Previously, 2010, 11, 12, we saw strong earnings growth on the S&P 500, and that was because 2% GDP growth was leveraged into 10, 12% earnings per share growth because companies were able to leverage those fixed expenses. Margins expanded.
That's
Well,
right.
those profit margins aren't expanding anymore.
That's
And if we're not going to get earnings growth, I don't see stock prices appreciating as much this year.
You share that, Brian?
Yeah, kind of a boring roundtable today, but because we're all in agreement. But yeah, it's the exact same sentiment.
All right, thank you all for that. We'll see how it shakes out. In the meantime, we invite you to take a gander at our top picks segment, top picks from these folks here, and that's just a mouse click away.